Thank you, David, and good morning, everybody. Your Excellencies, Ministers and Deputy Ministers, Honourable Central Bank Governors, representatives of development agencies, distinguished guests and colleagues, all protocol observed, ladies and gentlemen. I'm privileged to welcome you here today to this regional conference on financial sector development in African states facing fragile situations on behalf of the AfDB. We're very fortunate to have you in our presence. Finance ministers from Côte d'Ivoire and Burundi, the budget minister in the Ministry of Economy and Finance of Togo, Secretary of State to the Ministry of Finance of Chad and Zimbabwe, and central bank governors from several countries. We're also graced with the presence of senior government officials and private sector representatives, as well as our development partners. I'd like to express our gratitude to all of you for accepting our invitation and taking time out of your busy schedules to be with us for these next 2 days. Your participation is a testimony to the urgent need to strengthen the financial sector in African countries facing fragility. This conference, as mentioned by David, is a joint effort between the Bank's Transition Department, the Financial Sector Development Department, the Initiative for Risk Mitigation in Africa, the Making Finance Work for Africa Partnership, FSD Africa, and the First Initiative. I'd like to thank the co-organizers for bringing us together. Excellencies, ladies and gentlemen, fragility is a multifaceted concept and a distinctive feature of many African countries. 20 of the Bank's regional member countries are considered to be facing fragile situations, and together they are home to 300 million people, or about 30% of our continent's population. While the theoretical definition of fragility may vary across sectors, it is undisputable that fragility is a major development challenge. Do financial systems in fragile countries exhibit particular features? I'll leave that answer to the academics. But what is undisputable is that financial sector indicators in fragile countries lag behind that of other African economies, both in terms of access and depth. Recent data suggests that the proportion of adults in sub-Saharan Africa with an account at a formal financial institution is close to 29%. In fragile countries, it is less than half of that, at 12%, in part due to the lack of financial infrastructure. Furthermore, the most African fragile economies lie at the bottom of the World Bank's Doing Business ranking. Improving the business environment is essential to implementing growth-oriented policies. Building efficient and effective financial systems helps create an environment conducive for job creation, infrastructure development, and for the development of entrepreneurship and small businesses, which are the conditions most relevant to reducing a country's level of fragility. We're here to brainstorm and identify innovative solutions on how best to promote financial sector development in African countries facing fragile situations, bearing in mind the complexities and peculiarities of fragility. There is neither a magic solution nor silver bullet in addressing these challenges, but collective insights and combined and coordinated efforts that can help accelerate the pace and effectiveness of financial sector reforms. Excellencies, ladies and gentlemen, the rationale of this conference is obviously in line with the objective of facilitating the implementation of the 5 strategic priorities the AfDB unveiled in September 2015, known as the High Fives. It's worth recalling that the High Fives, Light Up and Power Africa, Feed Africa, Integrate Africa, Industrialize Africa, and Improve the Life of the African People, were acclaimed and overwhelmingly endorsed at the recent Bank's annual meetings in Lusaka by our regional member countries. Successful delivery of the Bank's High Fives requires strong, effective, and inclusive financial systems across the continent. Yet African financial systems generally remain small and underdeveloped relative to the other developing regions. The need to develop Africa's financial systems is therefore an urgent one, especially in states facing fragile situations. Africa's investment needs are estimated at over 200 billion annually, a huge financing gap to be filled. The Bank's 2014-2019 Financial Sector Development Policy and Strategy articulates its vision and ambition of a vibrant, innovative, robust and competitive financial systems, both domestic and regional, in Africa. This strategy also pursues the goal of achieving near universal access to essential financial services by 2025. As Africa's premier development financial institution, the Bank has taken effective steps to scale up its support to the continent's financial sector. It will attempt to identify technological solutions and promote innovations that can help lower the costs of financial services, and reaching out to the underserved populations, including women in micro and small businesses in fragile economies. For instance, the uptake in mobile money in fragile states is impressive, and the bank is eager to assist regional member countries deploying modern and efficient digital payment ecosystems capable of driving financial inclusion to the new levels. The bank will also deploy innovative approaches to step up its support across agricultural value chains, including mechanisms, products such as risk-sharing facilities, crop insurance schemes, to mitigate risk and create conditions for better access to farmers to financial resources. Excellencies, ladies and gentlemen, the bank recognizes that financial sector development is pivotal to the mobilization of massive financial resources needed to finance the African transformation agenda. Improving the financial sector's ability to mobilize and intimate finance to the key economic sectors including agriculture, infrastructure, manufacturing, mining, and trade is vital to achieving sustainable economic development in Africa. We're ready to work with the public and private sector and other development partners in reinforcing financial sectors in RMCs facing situations of fragility, and that's why we're here today. I wish the good mix of public and private sector participation we have here today sets the ground for productive discussions to support the design and implementation of smart policies and practices in fragile contexts. On this note, I thank you for your kind attention and look forward to a lively and engaging discussion over these next 2 days, and look forward to the takeaways especially. Thank you very much.
Thank you, Mr. Nalletamby. I'll now invite Mr. Mark Napier, Director of FSD Africa, to give his opening remarks.
Thank you, David. Excellencies, ministers, distinguished guests, thank you for your attendance. We're very honored to have you with us. Firstly, let me thank the African Development Bank for their hospitality today and tomorrow. And let me also say how delighted we are to be collaborating with Making Finance Work for Africa, the African Development Bank, the First Initiative, and the Italian Agency for Development Cooperation. My goodness, right now we could do with some European friends. We started talking to our friends here at Making Finance Work last year about putting on an event like this. But under their leadership, the idea has really ballooned into something much bigger than we had envisaged. An expression, I think, of the growing importance that donors and investors, in their very different ways, attach to supporting fragile and conflict-affected states. We are living in rather extraordinary times, and it's certainly a strange feeling to be attending a conference on fragile states when many people in my own country, the UK, are feeling a sense of fragility like they never felt before. Indeed, as the results of the recent referendum came through on Friday, I saw a tweet from Baghdad that quoted somebody saying, "I never thought I'd see the UK break up before Iraq." Quite funny, but quite tragic at the same time. No doubt the causes of this momentous decision will be analysed for many years to come, but it's clear that the vote was carried by people who, despite economic growth, were not feeling any better off, and who rightly or wrongly felt excluded from opportunity, threatened by immigration, and not supported by people who hold the political and economic keys. So in other words, inequality was really at the root of what happened in the UK last week. And when we come to reflect on the role of financial markets in fragile states, and the benefits we know that they can bring in spreading economic opportunity around an economy and reducing inequality, it is perhaps as well to remember the predicament of the UK today, and as an example of what can happen when not enough is done to address people's sense of exclusion. And we can also recall the late Nelson Mandela, who asked what use the vote was if it did not also bring economic freedom. Good morning, everybody. My name is Mark Napier. I'm the director of FSD Africa, and for those of you who don't know us, we are a regional financial sector development program based in Nairobi. We have a broad mandate which includes financial inclusion, but also we're doing a lot of work on capital markets development. Our funding is from the UK government, from DFID, and we're looking forward to the next phase of our program. And this is likely to involve significant investment capital that we will invest in market building opportunities that we think will make financial markets more innovative, competitive, and accessible. DFID has long been an advocate of the market systems building approach and has provided funding to a network of 8 so-called FSD organizations in Nigeria, Kenya, Uganda, Rwanda, Tanzania, South Africa, Zambia, and Mozambique. We work closely with this network to build their capacity where we can, and we support knowledge sharing across that network. So we've come to Abidjan for 2 main reasons. Firstly, and most importantly, it's a fact that financial markets in fragile and conflict-affected states are more underdeveloped and more excluded than many of the markets in which we work. And it is therefore right that we should be thinking about how to increase opportunities for that half of the population in Africa who live in states that are considered to be fragile or conflict-affected. We can't ignore such a massive block. Secondly, we believe passionately in the power of markets and their capacity to bring positive change. And we believe passionately that well-functioning financial markets create the potential for economic transformation. So we want to bring our market-building approach to fragile and conflict-affected environments because we think it will work. And yet we do not know nearly enough about how market-building principles can be applied in these difficult contexts. So we're here to learn as well as to lend our support. So market development is a systems approach to development focused on principles of scale, sustainability, and systemic change. In order to cause a market system to function better, we need to first understand where it is not working and what can be done to fix the problem. The systems approach acknowledges the fact that markets are dynamic, unpredictable, highly influenced by the political economy, and generally imperfect, even more so in fragile and conflict-affected states. So systems development is a long-term business, and we need to intervene with a clear long-term vision of what we're going to do, or what we're working towards when we talk of financial systems development. Who is going to be playing what kind of role in the future, especially in the converging world of digital finance? Who is going to pay them to play that role? What is government's role in the future? Is it interventionist, or is it laissez-faire, or somewhere in between? Who is going to pay for the infrastructure to support these financial systems? What level of financial sector development should we be aspiring towards? Our job is to act as a facilitator, providing financial and technical resources to market actors to make it easier for them to do their job effectively. Working as a facilitator requires having somebody to work with. And so we're hopeful that coming to Abidjan this week, we can start to identify some future partners. We're very clear that working in fragile and conflict-affected states will mean adapting some of the approaches we've used in the past, while staying true to our underlying market-building principles. But we're also not naive. We recognize that working in some of these places will be extremely challenging, to say the least. So given the scale of the challenge, I think we collectively need to be very smart in how we go about our work, avoiding duplication, leveraging other people's expertise and experience, and I would suggest seeking to facilitate rather than always presuming to intervene, but recognizing also that markets can and must be shaped. As Amartya Sen, the Nobel Prize-winning economist, said, market failures have to be dealt with not by suppressing the markets, but by allowing them to function better and with greater fairness and with adequate supplementation. The overall achievements of the market are deeply contingent on political and social arrangements. So fundamentally, effective partnerships, those political and social arrangements, will be what makes or breaks our efforts to build financial markets in fragile and conflict-affected states. As FSD Africa, we have a very flexible business model, which means we can provide the missing ingredient that allows these partnerships to get established. We encourage you to take advantage of the range of instruments that we have, whether TA funding, equity or first loss capital, returnable grants, and so on. And we're very determined to use these instruments to test and hopefully push out the frontier of financial access in these challenging markets. Please come and talk to us. We are about 4 or 5 people from FSD Africa. We'd love to meet you and talk about your issues. We hope you have a very successful and interesting and rewarding conference. Many thanks.
Thank you, Mark. I'll now ask Ms. Consolate Rusagara, Program Manager of the First Initiative, to give her opening remarks.
Thank you very much. Honorable Ministers, Governors of Central Banks, Senior Officials, Development Partners, distinguished guests, ladies and gentlemen, welcome to this conference on financial sector development in African states facing fragile situations. I'm very glad to be part of this. I'm very proud to be a part of the organizing group. I want to thank the AfDB, Making Finance Work for Africa, FSD Africa, for hosting us and for co-organizing this conference. Just as introduction, FAST stands for Financial Sector Reform Strengthening Initiative. It is a partnership between the World Bank, the IMF, UK government, Switzerland Corporation, the Netherlands, German Corporation, and Luxembourg. It was started after the Asian crisis to help strengthening the financial sector. And we're working in a number of countries, so far 120 countries since 2002 when the first initiative was started. We've spent about $140 million on 184 projects in sub-Saharan Africa specifically. And among the many projects we deal with in strengthening financial sector, we work on financial sector stability, financial access, and financial sector deepening. One of the big projects we have, or one of the big products we have, is helping countries develop their financial sector strategies. And that's really something that is relevant to the reason why we're here. We believe that fragile states face several challenges in developing their financial markets. This includes insecurity for assets, physical assets and goods, and people, dysfunctional institutions, weak legal infrastructure, and other important foundations for developing a robust financial sector. We have a very good group of participants in this meeting, both from the private sector and the public sector. And it's my belief that to overcome these challenges that face governments of fragile states, it really needs a concerted effort between the private sector and the public sector and the donor community. So we can't have a better group to discuss these issues than the people we have in this room. Over the next 2 days, these distinguished speakers will share their knowledge and experience, including innovative policies and private sector-led solutions to accelerate financial sector development. I sincerely hope that this conference will provide a number of opportunities to interact and network and build lasting partnerships through which we can keep exchanging ideas on solutions. The challenges to financial sector development anywhere are always very tough, but they're even much tougher in fragile environments. Fragility, like Mark said, is not an African phenomenon, and it's not a permanent one either. We must work together to break the cycle, and the financial sector has a role in breaking the cycle. For most of the countries that have overcome fragility, the ability to create, for the economy to create jobs is one of the surest ways of ensuring that post-conflict countries can overcome fragility. And you can't create jobs without the financial sector. The biggest creator of jobs is SMEs, and SMEs need financial sector as the engine to develop and thrive. And in this way, this is the role of financial sector, and specifically a need to develop the private sector, private part of the financial sector. So I really think that this conference is going to have to discuss ways and means of getting this started for the countries that are overcoming fragility state. through access to finance, efficient markets, and effective regulatory supervisory sectors, nations are able to build and empower their citizens and their small businesses and their industry to grow and compete on the global stage and to accelerate growth in a meaningful and sustainable way. In the last decade, Africa has seen a number of conflicts decline and watched economic growth soar, notwithstanding some setbacks due to the global financial crisis and the current commodity price shocks. We've all seen how the cycle of fragility moves from physical insecurity to economic insecurity and back and forth. And I think the best way to stop this cycle is to make sure that from our perspective, from where we sit on the financial sector, to make sure that we build a robust financial sector that is able to overcome the vicious cycle of insecurity. One of the ways we've seen this work is through digital finance and expand financial inclusion in an unprecedented way. A number of years, all these things were unheard of and unseen. But we've seen in many ways where places as remote as 100 miles from, or many miles from the capital city, we see people in the village doing their normal financial economic transactions with their phones. And this has been phenomenal in changing the landscape of the financial sector. We also recognize this did not happen overnight. It requires deliberate, intensive action, includes policies tailored to the local context, and the regulators that are equipped with tools and training to ensure stability and enable innovation. This is one of the roles FAST has played in terms of strengthening the supervisory capacity of central banks and other supervisors, but also helping in product development. We've been at the forefront in helping developing payment system in countries, helping developing capital markets and pension sector, insurance sector. This has been something that we've done in a number of countries, and I think fragile states present a more challenging set of countries, but we've done some impressive work in some of the countries. It takes a lot of effort, it takes a lot of consistency, and it takes a lot of resources and institutional capacity, which sometimes is lacking in fragile states. However, I think with concerted effort, we can make tremendous steps. I'm hoping, therefore, that this conference is the perfect timing for us to build on this momentum and to carry the continent forward through the partnership and coordination. I'm looking forward to very fruitful discussions in the team, and I want to again thank you, all of you, for coming, and especially the hosts, and to this beautiful city of Abidjan. Thank you.
Thank you, Consolate. Thank you. Well, that brings our brief opening ceremony to a close. As I mentioned at the beginning, we're going to take a 5-minute break because some of our VIPs unfortunately have to leave. So we'll take a 5-minute break, and I will ask Mr. Keith Martin and the panelists for the first session to get ready, and I'll introduce them in 2 minutes. Thank you.